Okay, guys, here we go. Good morning to you all, and welcome to a new week from your one and only PK. Then I just want to use this opportunity to do something crazy, for 5 minutes. I'm not gonna take much time. So if you look over here, this is gold weekly time frame. I just want to do this top-down analysis for those of you in my Telegram community that has been telling me, to drop this video on how to get your daily bears and how to mark your major key levels from the higher time frame down to the lower time frame for you to be able to see the overall market structure. Just like we are on the weekly time frame now, I'm still gonna go down to the daily time frame and you still see the same market structure. But the most interesting thing is this: during the pre-market analysis, you need to focus on the previous market highs and lows from the monthly down to the weekly time frame, then to your lower time frame, because for the execution you have to focus on the lower time frame price behavior, which is the major price reactions on the chart. Then you wait for the price displacement to take place. It's very, very important to see the price reaction within that major key level in order to grab the momentum in the market during your execution. So just like I said, you only focus on the major key levels on the chart. So over here, this was the previous weekly lows, and we have this previous major low here also. And mind you, we are still on the daily time frame. So why we are marking these key levels is for us to have a clear view of what is going to happen in the market during the week. This is not just analysis, this is market insight. Because without you having all this to back up the data, there's no way you're going to know how to navigate with the market during the week, and most especially with this horrible market condition. So what I do after marking these major key levels on the higher time frame, right? Just like you guys are aware, I don't go for short positions. I was doing that in the previous years, but I don't do that now. I only focus on my high probability setup, even if it's gonna take me days to get that setup. I have to wait for it instead of going short here and there, like all these BS you see on the internet. It's only the hedge funds that make money shorting the market, not you as a retail trader. It's total BS in my opinion. So guys, the only thing you need to do is to focus on the major key levels. It's very important. When you study the market structure, you already know where and when the price reaction is going to take place. And that does not mean that you need to have 100% win rate or 90% win rate. The most important thing is to have that sustainable system for yourself, for you to be able to stay profitable. So all these things you see, they all have something to tell in the market. All these candles, why I don't focus on candlestick pattern anymore? This is my 8 years in the financial market. So I was trying to see, if bearish flag, bullish flag, double top, all those shit. works, but you need to have data to back it up, which is why I focus on the major liquidity model. So the Asian range must be taken out during the London or New York session to push that price to the major direction. So here I don't use for time frame, because when you already marked the major key levels on the daily time frame, you already have the overall view of what the market is going to do for the week. So what I do, I use my 15 minutes or 30 minutes, then 5 minutes time frame respectively. Whichever one that works best for you is cool. I use them, to follow up the market structure, because during the price delivery, you just have to follow the major direction of the daily bears until the next Asian day to see the price reaction, if that previous Asian low or Asian high is going to take out. That's why most times you see the major price reaction on Monday morning during the Asian markets open. Then the next thing you're going to see is big manipulation during the New York session, just to come back and grab 70% of the liquidity. So you have to take note of all this. You have to take note. You see here on the 15 minute time frame, this is Pepperstone, so it's fucked. So look at the 30 minutes time frame. You see we have all our market structure here, and it's very clean. You can see all of that. So what we're gonna do is we need to see what will happen during the market open. If the price is gonna respect this our key level for us to see a push to potentially see the price to take out this previous high to give us a new swing high for the week. So we're definitely looking to see price above 5k this week if we have good price reactions here, and I think it's possible. So you have to take note. The market belongs to the areas of liquidity or inefficiency, just like your relative equal highs and lows in the market. So guys, it is very, very important. I just use this Pepperstone to show you all as an example. So guys, when you die down to the lower time frame, you need to see how the price reaction takes place. That does not mean that my analysis is the best. That does not mean that my analysis is correct. So this is something that I have data to back it up. So meanwhile, we're just gonna wait to see what's gonna happen by Monday market open. So you see the major price reaction and how everything is gonna take place. So I don't use the 1 hour time frame whenever I'm trading. You can see this is the only thing I focus on, which is the 15 minutes price reaction and the 30 minutes, then 5 minutes respectively. I was using 1 hour time frame, 4 hour time frame back in the days, but now I already know how the market structure works in line with the Killzones. So I just have to focus on the major key levels on the chart. So the lower time frame, like the 15-minute time frame, we are just looking for a potential market structure shift, which is basically the liquidity sweep. So the liquidity is the most important concept in the market, which most people ignore these days. Most times when you watch the market price reaction during 9 a.m. or 10 a.m. New York, you'll find out that the liquidity will be taken out maybe after a slight displacement before the major price expansion. So there must be manipulation. That's why we focus on offset price accumulation and price expansion. These things are very, very important. And for you to be able to understand how the market structure works in line with the Killzone, you must focus on the major market reaction, which is how the highs and lows in the market are being created. That is how you will be able to navigate the major key levels in the market. That is how you're able to know that, okay, these are the major areas of liquidity in the market. So the most important aspect of trading is to follow the market structure and understand how the price delivery takes place on the lower time frame. Because without you having all those data, you're not going to understand what the market is doing, and you'll be trapped. Because when you see a little market structure shift or liquidity sweep or maybe a liquidity grab at the major key level, you think, oh, the market is about to sell. Even if you see a long bearish engulfing candle, that might just be a little liquidity sweep for the major price expansion to take place. So guys, if you are new to my channel, you can subscribe and click the like button. Also, you can use the link in my bio to join my Telegram community. Thank you and stay safe.